The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And it is a brisk morning here in North Carolina. It was 28 degrees where I'm at about an hour ago. Starting to warm up a little bit, but it's a daggone shame. We have so many apple trees and pear trees and damson trees and all kinds of fruit trees out here, and they all have blooms on them. And man, had the sprinklers out last night on a lot of them, trying to keep the blooms alive. And I always thought, I did a little reading on this last night because my original thought on this was, maybe the ice would keep on those blooms some kind of insulation so it wouldn't go below 32 degrees. But the actual mechanism there is the creation of ice actually creates a little bit of heat. So if you keep putting, the water on the blooms and the ice keeps building, it keeps creating a little bit of energy, and therefore, doesn't quite get to 32 degrees around the ice. So the deal is when the ice, when it starts warming up, you actually have to kind of keep the water on it and, don't let it sit there. So I hate this. There's a lot of strawberry farmers around here. I think they had it easier than the guys who have fruit orchards, though. But it's just wild. I mean, almost the middle of April, and we got a hard freeze, and we're expecting another one on Saturday. So that's the weather report. And JIC is still practicing. Here we go. That's pretty funny. 10-year. Here's a 240 on the 10-year. If you guys are seeing this. Yeah, I mean, I actually worked kind of hard this year because I knew I was going to hang around and not go to Asia immediately again. And, man, even had a bunch of potatoes up. Had to try to cover them. But anyway, all right, the 240 on the 10-year. This is the kind of regulation of the trade up. And what's happened here is, if you'll notice, and we got not a big wide profile, so this is a little concerning to play these inflection points on the short term. But again, since we started ramping up past this 129 area, and we're going to show that on the weekly, we've had, pretty much a unfettered move up here. And these 240s usually regulate the trade up. And a lot of times these fair auctions are explored on the daily and the weekly. The 240s, similar situation. Right now we've got short-term support at 130.20 and a half. Remember, got some more notes coming out from the FOMC yelling, hey, we're going to keep our eye on it and keep rates low. That kind of, there's going to be more notes on that coming out today. So maybe these treasuries are going to kind of just churn around, and this might be a decent little day trade here. But again, keeping some of the position on, like Joey was talking about. We get through this 129, 129.12. Having some contracts on keeps your eye on the price as far as what's the prevailing trend. Why did I get in this trade? I'm not going to get ricocheted around and start shorting things for no reason. We don't have any long-term reasons here to take this off or dismantle it at this point. But again, taking some off the table, and playing around with a core position, based on new profiles attempting to appear and profiles locking in on the 240 are never a bad idea. So that's my take on the 10-year. And as we look at this S&P trade, we're going to kind of go through this, what's happened in the last 24, 36 hours. Talked about getting back down below this 2047.50, 2046 area that happened yesterday. We kind of rallied back up into it this morning. This is today's trading, hit a high at 2049.50. So where do I think this thing's headed? Again, seems like the notes are on the launching pad, just sitting up there. Not a lot of reasons to short that right now. Here's the S&Ps. Here's that. This is our 240. Here's the move this morning up into 2049, and then we're selling off. Remember, we talked yesterday, 2047.50 into this 2049.75. Again, dual inflection points lining up. I'm going to start the scanner really quick here. And man, did you guys hear about the Prime Minister of Iceland? Or what is his title? What is his title? Where's that article? In shame. I'm going to find it on the break, man, because of the Panama Papers. I don't know if you guys heard about that one, but I guess it's the president or the prime minister of Iceland has resigned. I'll get you the details on that in just a little bit. Let's take a look at the scanner. Going into the dashboard. We're going to go into the futures section really quick, and we're going to look immediately at the 10-year. And there's a June contract, as you can see, getting into some support there. Here's the 240s, kind of bounced off of it in the last couple of minutes. So there's all the inflection points that we talked about. But what I wanted to do is go back into the indices section and look at the S&Ps. Here's the kind of the climate on the intermediate here across the globe. A lot of red you're seeing, net profile breadth, negative situations. But here's the S&Ps, and here is the inflection points on the, and we're going to look at the landscape view here. So this is a new profile on the daily, but remember we've had, and I'm going to go back to my charts here. I can get this pulled up here. Previous profile high, that's the one we were looking at on E-signal, 2047.50, there it is. And the 240s, here we go. There's that 2049.75, now you got 2051. So got a pretty good lid you can play defense against. Why do I keep harping on these two numbers? If you watch this show enough, whenever I kind of get into a trade opportunity, we've got a little bit of heaviness on the breadth on the daily. This is really interesting that the daily breadth may actually be rolling over in a negative territory. At the same time, we've had these things spin over on our 60-minute on the 4th morning time. We started having this short-term breadth turn negative, and at the same time, we were talking about crossing that 2047.50 and getting below there, and then using all this information and the possibility actually of our intermediate breadth turning negative. If you can look at this here, I think you got some odds in your favor to play defense above that 2050 area. We're going to be right back, guys.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And on the Iceland situation, it says, just to get specific about it, David Gunnlaugsson, this is the Prime Minister of Iceland, says he would resign after the leak from Panama revealed his wife's ownership of a shell company set up in the British Virgin Islands. I can't speak this morning. Icelandic government bonds saw their biggest sell-off in 5 months. Blah, 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 blah. Who cares? Doesn't everybody have a shell company in the British Virgin Islands? Jay, don't you have one there? Tammy? That's par for the course, right? Okay, cool. Just making sure. I mean, this is not odd that the president of a company basically, or president of a country basically, his wife's got a shell company in the BVI. Wow, big deal. And yes, Tom, the population of the country. Last time I was there, they had 250,000 people that lived in Iceland. And yes, South Boston is probably bigger than that. And you know what? Tom, this is wild because you were talking about, I think they were called expediters or some airline tickets we were talking about. I think that you were, if you want to call and talk about that was a fascinating story. But I had found one of those people. This was back in, I guess it was back in the late 90s. They were called expediters, and I found a ticket to Europe through Reykjavik in Iceland. Round trip ticket, like $300 back then. It was unbelievable. Got it through one of the expediters, some crazy ticket deal, trying to fill up seats or whatever. And I asked him if I could stay in Reykjavik for a couple of days on the way back because it was on Icelandic Air. And man, there was nobody on the plane. I mean, they were hurting bad. Very nice plane, though. Nice airline to fly on. Not bashing it. But coming back, stayed in Reykjavik for 3 days, rented a car, and drove across Iceland. Not through the glaciers, but, on the roads that they have. It's a really wild place. You can get hot and cold water right out of the ground in a hotel. killer seafood everywhere. Beautiful. It feels like, you look across some of those deltas where they have the greenhouses near the coast. Incredible landscape. And I've been practically to every country on the earth except for maybe Chad or something like that in Africa. Iceland is the most beautiful place I've ever been. You can get some insane colors in the morning. I liked it. I went in the wintertime, believe it or not, too. So I liked it. I was younger, got to sleep late, a lot of dark. But when the light's up, you get incredible colors looking out into the ocean from mountain peaks. And there's wild horses running around everywhere. And they got, they're kind of small and they got long hair and very friendly. Come up to you like a dog. It's kind of a wild place. People have houses that are kind of embedded out in the country, in the side of the hills and the grass on top. It's a very cool scene. And people have their houses right next to a steam vent. And they got this place called the Blue Lagoon. Look it up on the internet. It's very cool. Oh my God, who's talking about Hooters? Anyway, going back to the S&Ps, but Iceland's a great place. If you get a chance to go there, go there. People always tell me if you want to go to Europe, go to Italy 3 times before you go anywhere else. That's a great place, but Iceland is there's nobody around. You got the whole place to yourself. It's very cool. And they do have a golf course there outside Reykjavik. And it's grassed in between volcanic rock everywhere. So Tom, if you get off the fairway, for folks like you and I that live off the fairway, it's brutal. Okay, I will stop talking about Iceland. Here we go. This is what I was talking about with the S&P breadth. We're getting a little heavy here. The internals are getting a little on par with each other, to say the least. This thing rolling over and becoming heavy here on the daily is interesting because obviously we just talked about the 60s and the 240s crossing over, and being able to look at this on a short term, trying to lever against that 2048, 2050 general area. This is kind of weird how the intermediate's starting to possibly even turn negative here. So again, we haven't had a lot of reasons to think this way in a while. And as I'm looking across the globe, obviously this is our intermediate. A lot of these things have flipped over. Here's the 4 hour. And here's the 1 hour. Let's just kind of reference that. So going back to the intermediate, if we mouse over and we look at the cell structure on a lot of these indices, you'll notice that now we've got the boxes, the upper highs and the upper lows right in your face here. You can access a chart on the DAX. Here we go. This is broken down on the daily. There's some technical damage going on out there. The S&P's, pretty much held up, but I think you've got a decent trading opportunity looking at that, again, 2050 as a lid. So keeping that in mind and going back to the notes. And again, what we're trying to do is do a little relationship talk before the market opens here. These notes coming down in here and finding support and bouncing off again. I mean, if you look at this, 130.20 and a half, we hit a low of 130.21, and now we're bouncing up some of these ticks here. If the S&Ps are heavy and these notes, again, we've talked about it a lot, are going to go sideways at worst. I think the easier trade, again, is to buy support on the notes and buy breakouts on the notes instead of trying to figure out the S&Ps so much. So the S&Ps coming off will obviously, take these things north. You do have some comments coming out today, some notes from the Fed. Be aware of that. You don't have to be in the market when those things get released. We're going to take a look at, let's honor the crude request first here. And again, I'm still in the May contract. John from Philadelphia, do not yell at me, please. This is the one that is in the continuous contract still. If you want me to look at June, I will. But here's the May situation. Finally, this is our daily. got a new profile attempting to appear. 3650 was a big number that we had talked about, 3658 for that matter. And, you know, I said there was no reason to really even start nibbling on crude yet until we had those indications. We started having those yellow peelbacks in the scanner. I'm going to reference the scanner really quick, go to the futures section. I'm glad you mentioned to look at crude first here. Let me look at where we at. Yeah. Let's take a look at this a little bit further when we come back, folks. I just wanted to reference the scanner, give you that peel back and being at the bottom on the weekly now. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We were finishing up with crude oil, trying to give you an idea of how to attack this thing. And there's natural gas trailing off again. Somebody had, we had talked about this the other day, and, getting its head above the profile. I told you guys I'm just not that excited about that. It's broken hearts so many times. And until we get a weekly close above 1991, just not interested. And really, I mean, spring's coming up here. Of course, it's freezing this morning, but natural gas, stay away. I'm just going to keep saying that, and probably till it goes to 1. Here's the crude oil situation. What I was going to do is kind of reference the scanner here. Here's WTI crude. So what we're seeing in the sell structure immediately is, we've had a little bit of a run here, that arrow up on the 60, no doubt, even though we're in the balanced area. We got a new profile probably going to appear. And we're at the bottom, sitting in the neighborhood on that weekly unfair low that we talked about was a big number. So the question really is, do you sell the rally up into that inflection point, or do you wait and buy above that 36.58 general area on the weekly? Now, let's just kind of take it all in for a second. All right, we have a new demand area probably going to appear tomorrow on crude oil. If this could, this yellow thing could disappear. But I think the smart trade here really is, and I know Tom was nibbling on this yesterday, and he's right. He caught some air on this one big time. But the conservative play might be to just wait and let this new you don't have these daily profiles come out every day, but when you have one, they're really cool inflection points to kind of pick battles around. As you can see, there's one. Here's some stuff over here. A little bit of a breakdown there and rally back up into it, come back and retest. I would love to see this thing climb a little bit more, have the new inflection point sitting down here. It would be awesomely cool for it to line up at 36.58. But I just think we need some more information here. So again, you don't have to put trades on every day. Part of this game is patience, waiting for these stars to kind of line up. I know Larry will talk about the stars later that are more appropriate, but just that saying, I mean, it's, sometimes you have to sit on your hands, and this is one of those times, I think, in crude oil. Just get a little more information and be able to bank against it. There's a lot of other trades out there, and what the scanner does for me is it can find some of those opportunities. I'm just looking at the futures here. If I want to see what's sitting on weekly unfair lows, obviously we got crude oil here. This is the futures. We've got the DAX. And let's take a look at copper, actually. All right, so as we look at copper, and again, this is just looking at some of the futures. I'm going to look at May copper. It's saying that we're coming down into a weekly unfair low. There it is. So, what do you do with this? I want to reference the dollar before we even look at this and talk about this. I just want to let you guys see that the dollar has been kind of doing a little bit of a bounce here, but there's no inflection points to pay attention to yet. There's no hints of a new profile attempting to appear. Therefore, the dollar could get weaker still, and that's going to bode well for commodity prices in general if the dollar gets weaker again. So when I look at this, that's a kind of a default mechanism. As I look at this copper trade, I think we've got a decent opportunity to try to pick a battle here on these weekly unfair lows. We had this happen, the yellow peel back happening on the weekly week before this last week. Then we've got the new profile here. We've got the new inflection points. This is not a bad area to try to pick along on copper, and that's what you're kind of waiting for. Is you're waiting for the market to come to you, and on that crude oil trade, we just need a little bit more information because it's telling us we're going to get more information. And Russ is reminding everyone that we've got a inventory number at 10:30 this morning on crude, and yes, you have to be aware of those. Again, they're talking about constriction of supply again, I believe. In fact, it says OPEC and non-OPEC members will agree to an output freeze. That's a hopefully speaking type comment at upcoming talks in Doha on April 17th. They're trying to put some word out there, I guess, that they're going to get their act together and limit supply. But again, we've got an immediate number that's coming out at 10:30. You guys going to watch the Masters? That's a wild place. I mean, Augusta, Georgia is not the gem of the South, but when you get into that arena down there, man, it's a whole different universe of a cool scene. One of my best friends happened to be from Augusta, Georgia, and his mother used to still gets 4 tickets every year, like grandfathered in. And I didn't think anything of it. We go down there and go to the Masters, but it's kind of a hard ticket to get, from what I hear. I'm just kidding. It's definitely a hard ticket to get. I feel lucky that I had a chance to go down there a couple of times. But watching it on TV on some of these big screens, you can really get a good view. Being down there, they limit the amount of people that can go in there, I think, to 20,000 a day. So it's not crowded. You can kind of walk around. You can see a lot of holes at one time, too, getting on some of the peaks around, I guess it's 14, 15, that general area. It's a very cool spot. So let's take a look at gold really quick. All right. $12.32. Yesterday morning, I think we were above there. We talked about looking at that from the long side above $12.32. This is actually sunk farther than I would like to see it sink, and that noise level is just kind of long and wide here below the profile now. Not a terrible situation for longs. I think you still have a really good stake in the ground around this 1200 area, 1203. So guys who are playing this from more of a long-term view, I think that's where your defense is, below 1203. Guys who are playing this on the short or intermediate term, I've gotten faked out of this a little bit here myself. But again, you got to take stops on gold. If you're trading it day trading wise, it definitely can get away from you quickly. You guys trade this often enough. You've seen it make some crazy moves. So right now, the long-term play is still in play on the long side, but the intermediate's kind of on hold. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. I was going in the scanner and I was starting to do some just earlier plugging away with some manual sorts, and I was like, why would I do that? Why don't I just go to the custom sorts? So I hit breakdowns here. What this is showing, it's a real easy definition. Nothing, it's not brain surgery here. It's just all relative to the balanced areas. You know, basically what's been breaking down, what's the first bar of the breakdown on the weekly or the daily. You got Baker Hughes here on the weekly. Let's just take a look at this. This is the daily. This is the weekly. This stock is in the XLE without question. This is an oil stock that has not been, you know, the darling of the I'll hang in there world, like Exxon has been doing lately, and stocks of that nature. But again, I want to, you know, make a comment here. This breakdown, you know, the daily, the oil trying to rally, it may be something to look at. Any rallies back up into 40.76, believe it or not, may be able to be sold on this, but put a tight stop. A couple other things going on. Allergan, you know, if you're trading things like Allergan with the news, you know, the fall through of whatever they're trying to do, you want to be able to, if you're going to trade something wild and crazy like this, you want to be able to play defense. The daily, there's nothing happening there. The 4-hour, here's your inflection points to pick the battles. So you've got a big range, even on the 240s, 227.59 into 246.48. What this provides for me is some sanity. Again, I try to stay away from things like this, news stocks, but the action is big, the volatility is there, and if you can find a place to pick battles and play defense, you've got some decent risk reward sometimes on these stocks. So again, you have support on the short term at 227.59, and you've got some resistance at 246 here. Let's take a look at BHI on the E-Sigma. Let's just try to get some, where are we at this morning? I read that. Why did I not? Okay, so we don't have any. This is a real print this morning, right? Yeah, it's printing 39.50. So, you know, resistance 40.76, like we talked about on BHI. Let's take a look at Halliburton. I read this morning. Why did I not talk about this? Halliburton, obviously, as Terry is saying, that breakdown on the talks. Again, isn't it wild how this works this way? 33.23 comes down to the weekly unfair low. This is very similar type situation to copper, as we looked at before, coming back into those weekly unfair lows and rattling around, bouncing. Obviously happy they're not going to spend a ton of money on this particular trade, but the good news is on this one, Halliburton, you've got 33.23 unfair lows on the weekly. And then the daily, you got the unfair highs. So again, I think we had looked at this as a strong stock in the XLE lately anyway. But let me go into the ETF section really quick. And let me go into the XLE, the seller dweller of the intermediates here. And let me go down to Halliburton here right now. Again, had bounced a little bit off these weekly and dailies. But again, I like the sell structure of this. I think this might be a decent trade to play some defense around those areas. Those areas being 33.23, 33.67, that DMZ. Where are we headed on this? We could explore the entire fair auction on the weekly back up into 36.74. Crude oil, again, we've got some news coming out on it. We talked about that earlier. So, again, going to have some volatility in crude oil and these underlying instruments. If you want to pass on the excitement, don't be in those markets. Here we go. XLE coming down into support here, 59.51. It's interesting how, everything's kind of lining up here for maybe a little bit of a support bounce. The XLE not printing this morning yet, but again, very small profile. We talked about this yesterday. A lot of times you want to trade breakouts on this. We may be range bound in it for a little bit though. Again, you can play defense 59.51. We are printing this morning already 60.85. So printing a little bit higher this morning already. If you're looking to find some strong stocks in the XLE sector, we've been talking about this. Let's go back to our friend SWN. This is one, as we know, we talked about yesterday. We can play some decent defense around that 654. Again, not a lot of risk in that trade, I don't think. A couple other ones we looked at. HP we looked at yesterday, in fact. Let's take a look at this one, see how it acted. Here's that daily, weekly. I don't know if we're printing this morning. Let's go back to look at HP here. I told you I liked that trade a lot as far as a stock that had pulled back to dual inflection points and was showing some decent strength here. Hasn't started printing this morning, but again, here's the reason I like the trade. If you can get any help from crude oil, I think this thing's going to probably have a little bounce here. You might be able to take advantage of. Good news is, again, defense, defense, defense. Define defense on that one. XLF, those notes, possibility of heading higher. This thing finally started coming off, getting below 2237. I'm looking at that. All things considered, we talked about the S&Ps, looking as how they look right now. Those notes, widening, non-widening yield curve, financials not liking any of this, and financials not participating lately. I like the short with stops above 2237 on this particular trade. We're printing this morning already at 2232. So again, I like the ability to play defense on this trade. It's pretty defined. I like the relativity of this trade a lot too. Okay, question from Russ. This is a really good question. Let's take a look at the S&Ps here. And I'm going to go back to my dashboard. What the dashboard does, and we're making a different dashboard in our HTML5 version of this. So it'll kind of be webized. Like if you guys use the Nadex platform, it's kind of like within a web component. We're building this right now. So here's the S&P cell structure. And I'm going to go into the landscape view here. Yeah, we are below. Russ is stating true here that we're below profiles on all 4 time frames. Russ right now, I'm kind of ignoring the 60. It's a great lead time indicator for short-term trading. You literally can trade if you look at the 60-minute breadth calculations here, and you pay attention to the inflection points, even on the 60-minute time frame. That's a great trading system in itself. You got some overextension situations that can happen, and you've got some crossovers to pay attention. We're going to talk about this a little bit more relative to the S&Ps when we come back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, Tom, trying to get you some watchers here in Kuala Lumpur. I don't know if TFNN has a big presence there, but some guys were asking me how to get to the show, how to get to your network. And again, we're taking that embed code and putting it out there, Tom. So this is the first kind of thing we're kind of putting out there. Yeah, no, man, you're going to have the globe watching the TFNN network. Okay, so on the S&Ps, who was talking about that? Who in the world was talking? Russ, gotcha. Russ, it's early in the morning, and my brain has got molasses in it right now. So we just got to get to like 9 o'clock. 2046, that POC on the weekly. We talk about the POC in a wide profile as kind of the top of the mountain. It, things roll down one side and down the other. That POC was kind of a line of defense before we broke through it finally. And I'm not trying to be a Monday morning quarterback and tell you stuff you already know, but I just want to kind of point out that was a pretty decent, exactly, better than nice. And that was a rough morning. Man, I was about to die that morning. I was confused, like an old man with a couple of marbles rolling around up top. 2046, top of the mountain on the wide profile. And at the same time, that was kind of lining up. Again, you know, we're not to the tick here, but you want these neighborhoods to kind of be in line. And so a lot of times we've also got a new profile, kind of an outside profile, if you will, that's happened here. What does that mean too? At the same time, we're kind of bumping up into that POC. We've crossed the border, gone back and retraced into that important inflection point here. There's a lot to talk about here, Russ, so I'm going to elaborate a little bit. So outside box, close below the POC, go back and retrace into those other inflection points that are important. That also involves the 240. So what's this all saying? This is saying to me that we're going to have some volatility. We painted this picture. A lot of times, you know, it's like they'll come in and just, like Tom and I were talking the other day, they'll just explore these fair auctions just to do it. It's almost like somebody somewhere, whoever they are, has to take the charts and paint them a certain way. And this time, you know, we've gone back and retraced into it. We painted the picture already okay this morning while you were sleeping. And I think that this is a decent opportunity to be on the short side. But remember, this wide box is saying, you know, we're going to probably have some volatility, more than usual. There's a lot in this algorithm that outputs these particular profiles, the way they put them out there and how long they stay in force and things like that. You've got all this information in the scanner. I'm just showing you the E-signal charts because they're kind of pretty. Do I sound like Ned Beatty? Kind of pretty? Or no, the guy who was talking to Ned Beatty? You guys know what I'm talking about. Plus, we're in North Carolina. All right. Nobody's laughing. Jay's definitely recording this to play back later. Purdy, that's the word. Terry, okay. So, you know, when we look at all these things relative to the breadth and what's been happening and the heaviness of it, I'm looking at the S&Ps from the short side, folks. Stops above that 2050. Going to be a little volatile here, but I think this might be a decent trade for a little bit. Stay tuned. Larry's next. Stay tuned for everybody at TFNN. Have a nice day, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.